Hey, welcome to my channel Investment Research. I am an equity research analyst, and today we are going to discuss and analyze the stock SoFi Technologies, ticker symbol SoFi, one of the most discussed fintech names in recent years. We're going to break down their business model, revenue streams, financial performance, stock chart, risks, and future outlook. So stick with me until the end. SoFi, short for social finance, is a US-based digital financial services company founded in 2011. Originally, they were best known for refinancing student loans, but over time they've transformed into a full-fledged neobank offering banking, lending, investing, and even technology services to millions of members. Their mission is clear: to become a one-stop shop for personal finance. And in an era where traditional banks are struggling to modernize, SoFi is betting on technology and user experience as their competitive edge. SoFi's operations are structured around three main segments: lending personal loans, home loans, and refinancing. Lending still makes up the bulk of their revenue. Financial services, checking and savings accounts, credit cards, investing, crypto trading, and insurance. This is SoFi's fastest growing division, with membership growth exceeding 40% year over year. Technology platform. Through Galileo and Technisys, SoFi provides infrastructure for other fintechs and banks. This is a B2B SaaS-like revenue stream, giving them diversification. This trifecta model is unique because it balances high-margin tech revenue with steady banking services and lending growth. As of Q2 2025, SoFi reported over 8.2 million members, a growth of around 44% compared to last year. Each quarter, they're adding over 500,000 new accounts. Membership growth is important because once a customer enters SoFi's ecosystem, say opening a checking account, they often expand into multiple services. That cross-sell strategy increases lifetime customer value while reducing acquisition costs. Let's talk numbers. Revenue. For Q2 2025, SoFi reported net revenue of $586 million, up more than 20% year over year. Adjusted EBITDA, positive for multiple quarters now, showing operational leverage. GAAP net income, still in the red, but losses are narrowing compared to prior years. A big milestone. SoFi achieved GAAP profitability for the first time earlier this year, though quarterly fluctuations still occur. Personal loans have been the main growth driver, especially in a high interest rate environment. SoFi is catering to borrowers consolidating credit card debt, which helps maintain high loan demand. However, the student loan refinancing business has been soft since the US moratorium during COVID. With repayments resuming, this segment could pick up in 2025, giving SoFi an additional growth tailwind. This is a hidden gem in SoFi's business. Galileo powers digital banking infrastructure for multiple fintechs, while Technisys offers a modern core banking system. Together, these businesses generate recurring SaaS-like revenue, less cyclical than lending. They also increase SoFi's credibility as a fintech enabler, not just a consumer brand. Let's shift to the stock. Ticker. SoFi market cap, around $8 to $9 billion as of late 2025. Share price, trading in the 7-9 range after peaking above $20 during the 2021 fintech hype cycle. From a valuation standpoint, price to sales ratio is around 4-5x, which is rich compared to traditional banks but cheaper than many high-growth fintech peers. Analysts are mixed. Some see upside toward $12,000, $14 if profitability continues, while others warn about dilution and margin pressures. We also need to highlight risks. Interest rate environment. Rising rates increase loan demand but also raise default risk. Credit quality. Personal loan growth is strong, but consumer defaults could rise if the economy weakens. Competition. from both traditional banks like JP Morgan and digital-first peers like Chime or Robinhood. Regulatory risk. Fintech regulations are evolving and stricter rules could impact margins. SoFi's long-term story is still attractive. They're positioning themselves as the Amazon of finance, a single platform where customers can borrow, save, spend, invest, and trade. The expansion of their banking charter, which allows them to hold deposits and lower their cost of capital, is a game changer. With a stronger balance sheet, they can fund loans at lower costs and improve profitability. Analysts expect revenue to continue growing at double digits, with profitability becoming sustainable in 2025 to 2026. SoFi is at an interesting crossroads. They've proven they can grow membership, diversify revenues, and edge toward profitability. The stock, while volatile, presents both trading opportunities and long-term upside for believers in the fintech revolution. As always, do your own research before making financial decisions. Thanks for tuning in. Drop your thoughts in the comments. Do you see SoFi as the future of banking or just another fintech hype story?